Hey, good morning. Happy Tuesday. It's Tuesday, February 19th, 2019. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Good morning. Comment allez-vous? How are you doing today? You're looking good, Jim. Anyways, hey, nice to meet you. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Welcome to the webinar today, hosted by Forex.Today. Please feel free to ask questions. We will go through the charts. Likely we'll go through all the dollar pairs, all the yen pairs, gold and oil. Good morning, Jean-Guy. But feel free to ask about specific currency pairs, or maybe you may have specific questions about trading. Feel free. You are the boss, and I am simply a humble currency trader willing to share his 15 plus years of trading experience with you. Please pay it back by visiting tradersway.com and opening an account today. Pay it back. How do I like my new setup? I still don't like it. It's tricky running multiple 4K screens. For some reason, it's not that easy. So it's glitchy. Hey Royal, how you doing? Good day to everybody. Here we go. So we have a short week this week. The big thing on the calendar is the Fed meeting minutes. So good opportunity to do some reading. Yeah, we can do gold. I'm happy to do that. In fact, we can start there if you want. Hope you enjoyed your President's Day. There's some good setups yesterday. I don't know if you're trading your swing trades. Day trades are kind of iffy, but swing trades are usually still pretty good. Cool. So let me start the drawing tool here. So we had this situation. You know what? Let me do this a different color. We had a situation here where I said, well, you can wait for a breakout and buy it this way, or you can wait because we were here when we did that, or you can wait for another bottom and then try to take it up. And I said it could be this bottom, it could be this bottom, right, based on that, or it could be this bottom based on that. And what was the other one? And now we're way up here. Cool. So it looks like plan B worked. Plan A, again, higher, high, higher, low, higher, high. Plan B, another bottom, then up to the top. Of course, that's a bullish point of view, but it works. So now the real question is, can we maintain above here? Okay. Even though it kind of looks like it did a mini pullback and rise, I would still expect a bigger pullback to here in the future. So don't get too excited. But that does point to dollar weakness, and that's also a good thing, in my humble opinion. Rana says, good morning. Euro dollar at a buy or sell position. Well, if you were a swing trader, you're already short. So besides that, you know, I don't know. I don't know what your trade plan is. I don't know if you swing trade or not. But there were definitely some good swing trades yesterday. Not on that one. So let's take a look at WTI, because that's another one I'm very interested in. Right? Here's a plan A, if you recall, plan B. All filtered by the idea that you're either a bull or you're not a bull. And as you know, I'm a bull. So that's cool. Went a little lower than we would have liked it this week. That's how it goes. Then here's Thursday, or Thursday, yeah, maybe Friday morning. Gives you a little front run. And it's Oscar Mike. It's on the move. Still making higher highs again. Very cool. Now, the one thing I like about WTI, and of course we've talked about it a million times over the last million years, actually probably more than a million times over the last million years. The nice thing about this is it's not about supply and demand per se, is it? When price gets too low, let's say not even WTI, let's call it Brent, or just oil, whatever. OPEC comes along, and what do? They drive the prices up. Isn't it nice if you're a bull on oil? If it gets too low, you know someone's going to come in and manipulate the market so that you make money. Have you ever thought about it that way? That was one of the reasons we bought it at 44. Here we are at 56.5. But still, I love that idea, like that you could always buy it. Now, the reasoning has to be proper. You have to be at proper prices. They're not going to come in and jack up prices when it's at 50-something. But 40-something and 30-something, oh, yeah. So I kind of like that. So every once in a while, it's like, I don't know about free money, but close to it, right? So it's like, what happens to the VIX in July? This is the best sort of example I can think of off the top of my head. What happens to the VIX in July? Everybody's complaining about something, and that's reflected in the VIX. Doldrums, but how does that affect the VIX? Very low VIX, right? You get a VIX of like 9. So by the end of August, what's happened to the VIX? By the end of August, it's going to be at 20. Maybe 30 if it's a crazy year like our January was. We know this. It's just there. Nice. It's just nice. Like, there you go. The question is, are you going to do anything about it? Oh, you see a head and shoulders on this? What time frame? You're gonna play that? I guess you could. Wow, you're really out there though. You're like out there, man. You're doing this on like what, a weekly? And here's the other thing. If I don't know if you're doing this one, but you got it the wrong side. If you're trying this thing, that's not a head and shoulders. The head and shoulders would have to be up here. So I don't know what you see. We don't need to talk about it anymore. But yeah, so nah, I got to pass on that. Okay, so let's just go around the world. Let's ciao, ciao. Yeah, well, I couldn't see an inverted one there, but whatever. We'll talk about it some other day. KMP. I'm not saying you're wrong. I just didn't see it. That's all. And I think oil trades, I like to think very fundamentally. Even if it's a fundamental manipulation, I'm still okay with that. It seems to me that, you know, the whole oil industry trading in inverse head and shoulders on on a weekly chart. Most people that trade these probably don't even look at charts, but anyways. Although maybe an oil trader, but even an oil trader's got to move in inventory and hedge and stuff. So I don't know. I know, whatever. I'm not saying you're wrong. Yeah. I'm bullish for life. Even on the way down, I'll just step aside and let it fall. But that's part of a bias, right? Barring a global recession, of course. All right, so now what do we do? Well, we asked the questions, and so I'm just rehashing what we did, a week ago or something. But if you're a bear, this is where your entry was, and you're targeting here. If you're bull, this is where your entry was, and you're targeting up here. So I don't know what your plan is. Okay, a bear would have sold here yesterday. Target is here. Okay, a bull is preparing to buy it now and taking it that way. So once again, I think if you have a bias and you do your analysis, once again, it's all pretty straightforward. It's only exciting if you have no plan and you're trading on the seat of your pants, right? This is oil, guys. Is it or maybe not? I'm sorry, Kiwi. I'm sorry, I thought it was on oil. Oh, yeah, I switched over. Anyways, still pretty basic, right? So that's the monthly move here. That's the monthly move here. So if you're a bear, you got a perfect entry. If you're a bull, you got a perfect entry. So I'm assuming you're in one of those if you trade this pair and you have a trade plan. Those are so straightforward. I doubt you missed them. Okay? Very, 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 very straightforward. Cool. Okay? Cool. So what about this week? Well, if you're a bear, this is where we opened. That's straightforward again. And you know you're going to follow up this as a bear. So that's cool. And you're on the move again. Sweet! And you got the lower high and all that. That's everything that you ever hoped for. Cool. Right on. That's all good. But what if you're a bull now? Oh, well, that's easy. This is your plan here. Right? Because this is the buy zone plus the monthly pivot. So, boom. I can't imagine any other trade plan either way. You guys are bears? Cool. So you got to survive through this. There's going to be some sort of hesitation in here, I would say. And let's say if there is a bit of a bounce, it's going to get to about there, and then it's going to drop to your next level, and you're on your way here. Cool. Right on. And here's the more interesting thing. If you hit the target down here, if this is our weekly low, remember, you've also now confirmed the monthly, so you're on your way to the monthly low. Because you would have done this whole thing, and that would have made the bulls give up, right? Because all their bullish trade plans have failed. So that means not only are you heading down there, you're heading down here. So it's more than just to sell at a weekly M3. I mean, that might be your weekly trade plan, but what about your monthly trade plan? This is your monthly, this is your weekly, and you would have congruencies on the time frame, right? So now you would ride this entry and this entry down to here. And yeah, maybe you need another week to do it, but I don't know. We'll see. That's correct, NP. I have weekly and monthlies on here. This one's different, huh? Still Kiwi. Morning, Shane. So what do you think about this one? Much different story, huh? Well, you can still be a bear if you wanted to be. How does that play out? There's your weekly. Cool. This is your monthly. It's not great. It's not great. It's actually a little bit bad. But now you can trade the double top if you're a bear. And there's your weekly. And you're trying to take it down here. Right? You probably do something like this. And then it'll wimp out here or here. Now what about being a bull? Yeah, you can. I don't like it. I don't like it. You can. And it'd be something like this. But the reason I don't like it is like, who waits for a double top and then buys a dip? Do you guys remember learning that anywhere? Have I ever taught you to look for double tops and then opportunities to buy? Is that like an inverse hammock or something? Right? So a hammock is this, right? It's a double top, lower low, lower high, right? So have I ever taught you look for a double top and then buy here? No, not once in my entire life. And yet I've taught the other way, sell here 100,000 times. So yeah, so wait for this dip and then buy. I'd rather not. Well, Cedric, that's going to have to be a global macro issue. This going up isn't necessarily a Kiwi issue. It's a yen issue. Okay? Take a look at another commodity. What do you want to do? Bull or a bear? Okay. This is a bull buy zone. This is a bear sell zone. Oh, look, I've already marked it for you. Cool. Thank you, me. Okay. You could sell here. It's less ideal. When you look at this, another way to analyze it is moving averages. When you see a 200 EMA like this, is it bullish or is it bearish? Well, it can't be bullish nor can it be bearish. There is no trend. So if you're in a bullish trend, you buy lows. If you're in a bearish trend, you sell highs. Right? So like, for example, if you thought this was a bearish trend, you would sell here. If you thought it was a bullish trend, you would buy here. If there's no trend, you trade the range. Sort of like that. Okay? So just make sure you recognize that and you adjust to fit the market. Now it may fall here and then it becomes a trend, but your job isn't to create trends, right? So for example, if the market decides to go bearish, yeah, you could trade this as a breakout roll reversal trade. but you're not supposed to like guess or bet. Oh, I bet you it falls here. I bet you it's bearish. Okay. Okay. If anything, it's bullish because look where we started the month. That's a bull buy position. Okay. This is a bullish buy position. Right? So if anything, you'd have to say it's more. Brooks is buying it here. Yeah, well, you're about a day late if you're going to do that. Right? You shouldn't buy it here. Oh my God, no, you shouldn't buy it here. You should have bought it here if you're a bull. No, that'd be a terrible place, bro. Come on, bro. And oh yeah, so euro dollar, this was a great one, huh? What do you notice here? Well, we started the month in our old sell zone. This is the monthly M3. Okay. So what should we be doing in the new week? You may be noticing that all we have with this analysis is our monthly. So if we're bears, that's our selling entry. Okay. And this is our target. How nice. Euro dollars worked out very nice for us. All you had to do was be a bear and swing trade. Nothing to it. But what about the weekly? Well, let's add those to our analysis. And then now I'm going to have to zoom in so you can see. Check this out. So you're already a bear, right? Check it out. This is the sell zone name. So yesterday you could have sold it here. You were probably a bear last week and the week before and the week before that. So why not be a bear this week? Seems fairly logical. Brook, it's still a central pivot, so it'd be a terrible place to buy. I'm not saying you didn't make money. It still would be a terrible place to buy. It'd be an acceptable place to sell, but it'd be a terrible place to buy. It's just rules of engagement, that's all. Doesn't mean you're wrong, it just means it's not right. It's just not ideal. It's not part of the rules of engagement. Yeah, so the pullback is the drop back in there. So anyways, we'll see. Yeah. Like I said, it's still more bullish than, well, if I had to guess, I mean, it's set up very bearishly as well. So it's almost like a 50-50 where we are now. But on the longer run, it was more bullish than bearish, right? Yeah, you got a problem with that, Infinite Solutions? Huh? All right. Yeah, so anyways, yeah, cool. Remember the rule. So last week, the euro dollar opened out of position. Out of position. Anyone that's taken the swing trading course knows that in that scenario, you wait for this, and you got it. Pa-chow! Pa-chow! Straight out of the textbook, as Raymond says. Yep. It's a good job, everybody. Definitely a swing trader's paradise. Take a look at some other yen pairs. Well, we lost a few charts along the way, right? No, they're there. Let's do it this way. Pachow! Oh, wait. Still not there. Beep. There we go. G'day, mate. Euro yen. This one I haven't liked, what, all month. Just been staying away from it. Yeah, I still don't know what to do with it. It means nothing to me. I don't see anything there worth it saying. All right, start here. Pound yen looks much better. If you're a bear, this was an entry, and you're still fighting to maintain your bearishness. If you're a bull, gee whiz, man, I don't know what you're doing if you're a bull. I mean, obviously there's bulls in this market, but they're not using monthly pivots. But they are using weeklies, right? So 2 weeks ago, this was an obvious sell. This is a combination of monthly and weekly sells, right? That's straight up swing trading again, very simple. The target for that week was here, and right? So all the bears get out and it turns quite bullish for a while. So where did the bears enter again? Well, straight up, simple little scalp, right? Or not scalp, swing. So this is a weekly swing. This is a weekly swing. Did not hit our target. So that's really disappointing. And then it takes off to the upside again, okay? And not at the proper pivot either. So I look at this, and this is, the bears are technical. The bulls are news related. That's scary though, isn't it? Oh, some MPs quit and they're going to start a new Jeremy Corbyn, Theresa May, Juncker, Tusk, you know, like just something happens in the newspaper and, well, if you're a bear trading technically, you can do everything right and then get your ass whooped because somebody said something somewhere. Okay? So, so that I don't like. It might be exciting on a $5,000 account, but if you had a $500 million account, that's not what you want in your life. The you know, trade as you should, but everything can collapse in a millisecond for something unreasonable. So, anyways, that's what I say to that. All see. All see. What do you want to do? Okay. This might be an interesting number, don't you think? Let's back up, put some time on this. Not that far. Guess I'll do it this way. That shows you that we're really just floating around doing nothing. That this has become a sideways market. Similar to the pound, there's no real reason to be buying this. I don't know, Infinite, that's for you to decide. Okay, so this is your monthly sell. This is your weekly sell. So just like the other pair a couple of weeks ago, it came down, hit the target, beautiful swing, right out of the textbook. And then this is a bullish swing, but it doesn't hit target. And then what? Nothing's happened since. So we're losing volume and volatility. Well, I didn't say that either, Infinite. I said do your research. But I know people that had so much money in major banks, top 10 banks on this planet. They had so much money in these banks, and then they said, well, all right, I want to withdraw my money just in their savings account. And the bank didn't have that kind of money. So there's a lot of due diligence that needs to be done for every financial institution. Yeah, if you're trading oil, you trade CAD for sure. No, I'm not going to analyze Bitcoin because if I don't trade it, then how would I know it? How would I have an opinion? Okay, remember, I don't just trade technicals alone. That would be incredibly amateur. So I make decisions on macroeconomics, central banking policy, all of that kind of stuff. I wouldn't have that with Bitcoin, so I don't know if it makes any sense. And I don't know traders use pivot points, therefore I trade with pivot points. Like, do I put pivot points on a Litecoin or whatever coins that people trade now, and does it work? And what, I mean, I don't know. No, probably wouldn't. Wayne, do fundamentals trigger a key? Sometimes it seems that way, but it's only because traders know when economic releases. And by the way, economic releases are not necessarily fundamentals, but you may notice right around key news events that markets go incredibly technical, which makes sense because people are adjusting and preparing for the news. And so therefore it seems like the news creates the fundamentals and vice versa. I mean, news can create fundamentals in the sense that a central bank changes its policy, right? Or a news event is so unexpected and so off trend that it changes everything. Okay? So like if non-farm payrolls came out 0, yeah, the Fed might even cut interest rates. So yeah, the news created the fundamentals. The fundamentals are based on long-term economic trends in association to the central bank policies that are implemented because of these long-term economic trends. Okay? All right. So here's how you trade, right? If you're a bear, this is the price you sell. Can anyone read that? What is that? 83.65. So now what you do is you look in this area here or zoom in, and you look for bearish patterns like lower low, lower high, lower low, lower high. Okay, and you take it south. And that could even start here, 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 kind of thing. But you know where to start looking for bearish trading patterns. So the question is that a bearish trading pattern? No. But what if you did see a bearish trading pattern somewhere near here? Then somewhere you get on the clue train. What if you're a longer term bull, however? Okay. Then your Friday front run was here. Your re-entry was here, which was about 12 hours ago. And your target's up here. Okay. So you're going to see up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 take profit. That's what you would look for on a smaller time frame. Okay. So like this, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. And then hopefully there's an up, up, up. Now this is just simple price action. So as you know, like once you make a higher high, you look left in the old congestion. That's a buy zone. And then when it falls, you buy it. Then when it makes a new higher high, you drag this across, and that's your new buy zone. So then, but you do that when you're up here, guys. Okay, and then as soon as you get a red candle, you know it's on its way down here. So now you make a new higher high. That's cool. So soon, when you're still way up here, you look left, you grab this, you drag it right, somewhere around there you want to buy. Sure enough, right, 45 minutes to an hour later, you get a nice pullback. Great. So that's where you buy it. A couple hours later, it's made yet another higher high. You look left, drag that across. Somewhere around there you want to buy. Okay, comes down. And it should do this. And if you're up here, what do? You look left, you drag it across, you put that over there. And it'll probably do something like this. Cool. Now you're up here, new higher high, look left, drag it across. You know, it's just price action. If you don't know how to trade price action, you're not likely to be successful as a trader. There, I said it. If you don't know how to trade price action, you don't know how to trade, period. You just don't even understand the concept of how markets move. I think no matter what strategy you employ or what indicators, whether you use ADX, RSI, MACD, volume indicators, Elliott wave, I can't even imagine, harmonics, Fibonacci, gain, I don't care what you use. If you don't know price action, I really doubt you're going to be able to trade successfully at all. You just need to know how markets move. What's up, Emil? So in that case, I would suggest you visit fxbootcamp.com, sign up for one of the training courses to learn how to trade properly. If you're like, oh, Wayne, that's a shameless plug, how dare you, then go somewhere else and learn how to trade. But you're going to have to learn how to trade. Like, nah, I don't want to learn how to trade. I want to do it my way. I want to figure it out on my own. All right. Shane, I started with gold, buddy. That was the first thing I did. For shame, Shane. NP says, fundamentally, will dollar gain strength over the next few weeks? Well, here's your train of thought. If you believe global macroeconomics are poor and all the stock markets around the world are going to go down, then yeah, dollar will probably do a safe haven flow type thing. But if things are good, yet the Fed's not raising interest rates, then there's no reason to own the dollar. And so you might as well invest, right? So for example, if the market recovers and everybody feels good, but the U.S. stock market's only going to go up 8% this year, it's going to be a problem because institutions, for example, have to make 8% just to survive. And there's not much wiggle room there if you only think, like, what if the stock market only went up 6%? Then a lot of institutions are in serious trouble. They're not going to have enough money next year. So a lot of institutional investors are going to have to look in other places to make their 8%. So they start investing overseas. Okay, you see what I mean? So that is also in play. So you got to be careful. Question: deposit and pay? No, it's $1,000 down and $99 a month. Yeah, it's not a deposit. Well, so here's the thing, Michael. I said this earlier today too. The meeting minutes are going to be very important to read this week. So I don't know if people are going to step up their A game and actually read the meeting minutes, but very, very, very important. Oh, okay, cat. Kitty cat, caddy. Right on, caddy. Yeah, caddy, it's money. $1,000 down, $99 a month. But that's not just the swing trading course. That's the swing trading course. That's the day trading course. It's all the other courses. Then the day trading group, the swing trading group, and the performance analysis. So it's a lot more than just the swing course. You're getting 40 hours of videos, 6 hours of hand holding one-on-one with a personal coach, and then hours and hours and hours per week of live trading. So way more than swing. All right. Yeah. Cool. Anything radically different here? So we did this one and that one, I believe. USD. I think we actually did all these except USD Swissy. Okay. And then this is, to me, just like this is nomad's land. It's just out there. But, you know, it started bullish, but out of position. So you got to catch the 4 hour, which it gave you the opportunity. Then we've been riding that up for a while, but it hit target and consolidated. So you might be thinking, well, Wayne, now it's triple topped and we'll be heading back down. Well, yeah, that definitely could be the case. But remember, it's coming down off a target. So that's where people take profit. So there's still likely to be one more hurrah off of this and hit the monthly target before the actual. So you may end up getting a head and shoulders 10 days from now. Okay, because we're still not lower than this low. Okay. And this is coming down, but only because this is a take profit zone. So there still can be an up on this before the next big down. So it'd be more like up, down, would be the real logical way of reversing this. Okay, it's not common for it to come straight down here unless it's news related, which in this case wouldn't be the case. This case would not be the case. Cables skyrocketing. Okay. Okay. Cool. So funny, skyrocketing. You younger guys are so funny. Skyrocketing. It's up 25 pips. Oh my God. 20 years ago or whatever, 15 or 10 years ago, skyrocketing meant up 200 pips in the last 15 or 20 minutes. Now it means 25 pips. Cool. Well, if it is indeed skyrocketing, you set up the pullback and you buy the pullback. All right. Remember, most of this should be boring. So if you're reacting to this because news has happened related to the pound, great, cool, right on. All you do is buy the pullback. Once again, straight up price action. Easy peasy, lemon squeezy. Well, that's the other thing with the 500 pips. People say, I'm not saying you are saying this, but a lot of people say, oh, it's moved 500 pips, but they're counting the fractional pip. And it's really only moving 50.5, but that's not how fractional pricing works, so it's really funny. NP says markets move slower now. Well, no, there's more market participants, so it's smoother. There's less gaps and all that kind of stuff, right? Oh, rocketing, not skyrocketing. Yeah, right on. I apologize, Claudio. It's rocketing, but not skyrocketing. That's cool. I didn't mean to put words in your mouth. Caddy says with the Stokes, well, we can go that way too if you want. Let's go to the standard. There it is. In that case, I haven't seen an entry on this for quite some time if you're going to use this standard setup. Yeah, so typically with this day trade setup, I would line up the 15-minute with the hour. Okay, and MACD says bullish but returning. So I'm also looking at this. Okay, and I would assume around the watermark. Okay, so that's how you trade using oscillators. So I got that on a 15-minute, and now I got to line this up with the hour, and you can see the hour is in here. Okay, so yeah, if you're trading it that way, it's aggressive because it's counter trend, but that's how you do it if you're doing that. Okay, this is a hourly 21.55 cross, so you come back into the slingshot. Okay, this is all old terminology from a million years ago, but yeah, you can do it that way. Okay. Oh, thanks for subscribing, guys. Jam. Yeah, Michael. Yeah, risk on, risk off stuff. That's right. Money moves to the U.S. Bond market. Yeah. Yeah, USD, Swissy, and Japanese yen. Yeah, those are the standard safe havens. You might even look at like Singapore dollar and some others, but yeah, those are the standards. There was a setup 2 days ago. What, this one? Yeah. That's like, so let me change this now and go to more of, let's go, hang on. Okay, so that would have been it here. This is where bears are supposed to get out. This is where bulls are supposed to get in. Right? Bulls may have just kind of skipped this, didn't hit target there, so they're still kind of buying. And then you gotta, let's say, let's do this on weekly now. here. Okay. So on a weekly basis, check this out. You can see that this is where bears are supposed to take profit. This is the price bulls get in, and we're just waiting it. Just waiting. So it's all there. If you're a bull, if you have trade plans, daily and weekly, I mean, we could even go to monthly now. Okay. You see this? That's your monthly. That's your buy. So if you're using pivot points on a daily basis, on a weekly basis, or a monthly basis, you bought it and you're making money. Or if you're just using old school moving averages with oscillators, as I showed you, oscillators on a 15-minute and 1 hour combo also put you in. So it's like, I think the hardest thing here is not the tactics that put you into the trade. That's easy. I don't even care what your methodology is. This all comes down to strategy. Are you a bull on pound dollar or a bear on a pound dollar? That's all it is. Okay, that's all it is. And if you're a bear, that's fine too. You got setups that just didn't follow through, which is perfectly fine, especially when the market goes against you. It's people that trade because they think Forex is a video game. Right? Well, no, well, Michael makes, I mean, I know you're just joking, but, you know, the perfect storm and all that. No, it's just simple analysis. None of the setups are amazing or anything. I wouldn't call it a perfect storm, a great trade, or, you know, a perfect confluence that makes some massive big event, because that's what the perfect storm is, right? 3 hurricanes coming together to make one super hurt. No, there was nothing interesting about that. Those are just trade plans, right? And that's the point. So many traders trade like a video game. They go pachoo, 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 MACD, pachoo, pachoo, stochastics, but there's no thought behind it, and therefore they get very inconsistent results. If you start with the thought first, like I don't care what your opinion is on USD CAD. If we're in a bar, you should be able to argue with me. No, USD CAD's a bear. No, USD CAD's a bull. I could probably, you know, and I say, okay, well, give me your fundamental reasons why, and you could probably talk about it, and it all makes sense. Whether you're a bull or a bear, it still probably makes sense because you're basing it on your interpretation of data. There's nothing, it's like interpreting poetry in some cases. Like, what did it mean to you? But then you back that up with technical analysis, right? Which is a form of scientific methodology to confirm or deny your hypotheses. So you're like, no, oil's going to go up. No, oil's going to go down. No, macroeconomics are good. No, macroeconomics are bad. Great. And if you're a bull, here's the interesting thing. This is your buy zone this week. This is your buy zone last week. This is your buy zone 3 weeks ago. Cool, you made money every time. What's the problem? Right? And the upside is, if you're a bear, this was your sell zone. Did you sell it? No. Now you can counter trend trade off of that. Did you sell it? You could have. Did you? Could you? This is a sell zone that Monday. You could have sold it. No, you didn't hit your target. You could have made money. What about yesterday? This was, right? This was a sell zone. You could have taken it short, and in that case, you're still shorting it now. But you're like, well, Wayne, you just told me I could be buying it here. Yeah, you could be if you're a bull, but if you're a bear, you're selling it there. Somebody's going to win. But you can't be like trying to figure it out as you go along. Well, I was a bull here, and now I'm a bear there, and there, and a bull, and there, a bear. You just can't do that. Well, you can do it. And maybe you're successful today. I doubt it, but maybe you are. But you won't be on the long run. So I'd rather you just say I'm a bear. So let's go back as far as I can, right? So you were interested in selling. Oops, let's do it there. This was your plan A. This was your plan B as a bear. One of them made money. This is your plan B as a bear. That made a ton of money. This was your plan A, didn't get it. This was your plan B, maybe. Plan A, okay. Plan A, follow on. So you're a bear. Didn't get it, got it, got it, didn't get it, got it, got it, got it, got it. Okay? But if you're a bull, what? Got it, didn't follow through. Counter trend, no. This is a buy, got it. This was a buy, got a little bit, and this is a buy. You're in it, but we don't know if you're going to win it, right? So you're like, oh my God, like they both bulls and bears had very reasonable opportunities to make money on this pair. You could be a bear and make money. You can be a bull and make money. So if you're trading this and not making money, you're probably not a bull or a bear. And one day you'll wake up and say, oh my God, now I know what he's talking about. Right? Now I know what he's talking about. See, if you know if you're a bull or a bear, you know what prices to buy and sell. And even if you're wrong, you're probably not going to be horrifically wrong, even likely to make money if you're wrong, because you're still buying at support where other bulls would buy. Or if you're a bear, you're still going to sell at resistance where other bears are going to sell. And there's rhyme and reason behind it. It's not just video game boo, 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 boo stuff. Boo, 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 right? And then what happens is a lot of people, they never learn how to trade properly. So then they start listening to some guy who wants to, like, you know, trade the 1 minute chart with, let's throw in some oscillators here. I guess we got to go this one. And put you in 5 or 6 or 7 other trades. And what happens is sometimes it works and it goes like this, and then it goes, whoop, 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 right? And it's because you're missing the larger support and resistance lines that you just don't see on these small time frames. And they get you to trade a lot. If you notice that even though I'm representing Trader's Way, I don't get you to trade a lot. I don't get you to trade more. I don't get you excited about risking more money. That I'm actually trying to teach you how to survive on the long term, lower your risk. It's amazing, I think. And that's a testament to Trader's Way. No one at Trader's Way has ever called me up like, hey man, you got to churn and burn these suckers, these B-book guys, churn them and burn them. No one's ever said that to me. They want you to trade successfully and profitably for years and years and years. Like, oh, I can teach that. Central bank meeting minutes are the notes from the discussions that the central bank has. So there's two things. What is the central bank? We'll do it like this. What is the central bank's policy? That's the first thing. Because that'll create risk on or risk off. Second of all, what will the central bank's policy be if it changes? I'll put delta. So if they're hawkish now, and then will the next move be more hawkish, or would it suddenly be dovish? Okay? Okay, Mac? Big Mac? That is a big thing. So if they're hawkish and they raise interest rates, and then the next question is, will they raise interest rates again in the future? And if so, how many times and where in the future? And that's the questioning. And people are positioning their portfolios based on that assumption, that trend in the central banking policy. And then all of a sudden, when the data starts to change, people start discussing, ooh, well, will the central bank moderate their hawkishness? Will they become more dovish? If so, what is the next move? Is the next move still raising interest rates, but less times in the future? Are they neutral? Are they done raising interest rates? Is the next move going to be cutting interest rates? That's the finance aspect, because financiers always have to worry about future cash flows. That's what finance is. It's the study, the mathematics, if you will, of future cash flows. And things, interest rates, for example, impact the real returns of projected future cash flows, right? And so that matters, because then people will start adjusting. Financiers will start adjusting based on these future assumptions. And then the actual policy itself also matters, right? So that's what our job as traders is, to understand the here and now, like what will the price be today for us to buy, and what will the price be today for us to sell. But then the bigger question, which is way more important, what's going on today, it's sort of like what's going on in this period, with this week, this month, this quarter, this year. And we know that all lines up with central banks, which typically meet, every 6 to 8 weeks, depending on what country and stuff, right? So over the next period, what will the future likely hold, and how will, let's say, the cost of money change in conjunction with that expectation? Dot plots are part of it, but, the money market's the best, right? The money market's the best. The Fed funds future rate market, the market that banks trade with each other. What is the value of money today? You can look at this. What is the value of money at the next Fed meeting? What's the value of money based on 6 weeks after the next Fed meeting? And 12 weeks after the next Fed meeting? And 18 weeks after the next Fed meeting? And you can look at it and you can see they are right now today negotiating these prices based on all these bankers getting together essentially in the same room and hashing out, based on future expectations of interest rates, what the value of money is now on these future expectations. And that's awesome. It's not opinion. It's trillions of dollars being negotiated. There's the price. Very, very, very interesting. I think let's wrap it up, huh? Oh, well, T-notes are just a 10-year government bond, basically. They're not bonds, they're treasuries. That's what the T is for. Okay, so that's an investment that lasts for 10 years. You're lending the government money for 10 years, which is, it's going to be susceptible in price, right? So like if I bought it and then 3 years from now, I'm like, you know what, I want cash because I want to buy a yacht. So I'm going to have to sell some assets. I'm like, yes, I'll dump some of those T-notes. And you can buy them from me, depending on their value or expected future value. You would negotiate a price for me, right? You might pay more than what I bought them for, or you may pay less. It's sort of like, I have an old car. How much do you want to pay for it? Well, that really depends. A used, let's say, I was going to say a used 10-year-old, but that wouldn't be good. Well, like an old Hyundai and an old Ferrari are going to have different prices, is all I'm getting to. And then out of Ferraris, let's say, which Ferrari, right? Which Ferrari do I have? Because that matters. Some will go up in value, some will go down, depending on the market. And treasuries are like that. Very often you can buy treasuries or even bonds at a discount, but sometimes you're going to have to pay more. It might say $1,000 on it, and you're like, I'll give you $1,000 for that bond that says $1,000. I'm like, no, you're going to have to give me $1,005. Like, 1,005? I'm like, yeah, well, look at this interest rate, and interest rates have gone down, so you're going to have to pay me more in price. So all that happens, okay? What I'm saying is, like, that's one thing. What I'm saying, even more important, really, to traders like you and I, is what is in the Fed funds rate. This is smart money trading with smart money over the value of money today and the value of money, expected value of money in whatever amount of weeks until the next Fed meeting. It could be 3 days, it could be 3 weeks, it could be 6 weeks. But then the Fed meeting after that, where, see, at these Fed meetings, they could raise and lower interest rates, right? So if most of the market thinks the Fed's not going to raise interest rates at the next meeting, then you'll see that reflected in the price of money between now and the next Fed meeting. But if they're expected to raise the meeting after, which I guess is the June meeting, if most people think the Fed's not going to raise in March, but they are going to raise in June, or is it April, but then they will do it in June, then all of a sudden you'll see that reflected in the contract negotiations they're having today. And you'll be able to look and say, oh, well, the next Fed meeting, they're not pricing in any interest rate hike, but the week after, or the meeting after, they are, and the price of these contracts have changed to reflect those assumptions, and that could really impact what we're doing. And that's much more fundamental. If you have T notes in 2024 during the stock market crash, the value. Well, yeah, sort of. It depends. It depends on the example of like when you bought and what's the yield. So like if you bought a 10-year T note now, right, you're only getting 2.7, but they were 3.2 just a few weeks ago. So my 10-year T note is worth more now than a few weeks ago. And now for yours to be worth more than mine, you're going to have to get the yield back up over 3.2, but that might not happen even this year. It might, but it may not. So my note's worth more than yours, even though yours is shinier and newer. Okay? And then, well, what's a 10-year T note going to pay before a 2024 crash? Let's say if there's one in there. Well, what if 10-year T notes are 3.5 or 3 3/4, almost 4%? What if they're 5% right before a crash in 2024, if that's correct? Then what's your note worth now if it's paying 2.7, but I can just buy one that pays 4 or 3.75 or, right? Like your note's going to be hugely discounted, right? So again, if you're paying 2.7, I can just go to the treasury and get one for 3.7. Why would I buy your stupid 10-year T note? So that's why I said depends. That's why I'm saying if you use macroeconomics and fundamental analysis and all that kind of stuff, and you're predicting in 2024 a big financial crisis, and you're looking at all the different things you need to look at, and you are absolutely 100% convinced the market's about to crash, then get the hell out of the stock market and buy as much 10-year T note as possible. And then if you're right, you're locking in a high-priced yield. And so when the market crashes, people will want the yield because everyone else is losing 20% of their net worth, and you're getting paid 5%, 4%, and everyone else is losing 20%. What do you think they want to buy when they get out of the stock market? Well, they want to buy your note. So now there's an auction of people trying to buy your note, right? I'll pay you 101%. I'll pay you 104%. I'll pay you 108%. And now there's a bidding war to buy your bonds because everybody wants out of the stock market and they want to buy a high yield in the bond market. And you're the one with a 10-year T note that will pay someone 4% or 5% a year for 10 years Meanwhile, everyone else is losing 20 or 30% in the stock market. Hey, +4 guaranteed is a heck of a lot better than -25, right? But buying it now, Michael, no. Because again, if I can buy it at 4 and you're offering 2.7, but you know what? 2.7 is a heck of a lot better than -25, right? But anyways, why don't we pick up tomorrow? Sound good? Peace on earth. May the pips be with you. May our profits be above average. Feel free to download my chart templates. Please visit tradersway.com. Open up an account today. And then install my chart templates on your new MT4 platform. If you need further education on pivot points, price action, swing trading, all this stuff we talked about today, fxbootcamp.com. You insert some money and out pops knowledge. You could wait 15 years and gather the knowledge for free, slowly but surely, or you could just pay money and gain knowledge. It's up to you. If you don't have the money, well, you certainly have the time. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Thank you very much for being on my team. Click the Forex.Today logo to subscribe. Watch the 4,000 videos I have on YouTube. See you tomorrow.